Get started here. Welcome to the 11th town hall, believe it or not, since this business started. I want to start off by thanking our sponsors. You just heard from Doug Burke, CEO of CU Service Network. Obviously big. CU Broadcast, Mike's here, and I see Dante's here from MemberPass, a division of CU Ledger. So we'll definitely get to that kind of towards the end here. Well, let's go ahead and get started. So let's go through the usual. For those of you who are just joining, and most of you have seen this, but I'll be quick. Your host is myself and Mike. Basically, when all this started, I decided that I don't have any answers, but you guys probably do. And that's why we pulled this together, was to get people to talk and collaborate. So after a quick introduction, I'm going to go over some of the topics. We'll talk about those. If you'd like to speak, if you're a credit union, you have questions, or you want to share something really cool that you've done, we really want to hear from you. So if you'll go into the chat, which we'll show you how to do here in a minute, and share with us, what you've done, or if you want to talk. Speaking of that, we're actually going to ask everyone to go into the chat and just announce themselves. And the reason we do that is because of the Zoom bombing. So if you don't pop in and tell us who you are, or what you're doing, we're probably going to dump you out because we don't want to see any nakedness or anything inappropriate or offensive in our Zoom. If people are talking and want to, if someone's talking and sharing something with that you have more interest in, or think that you'd like to learn about, we encourage you to use the chat, which we'll talk about in a minute, to talk to that person directly. If there's information about this that you think would be compelling to everyone, then go ahead and put that in the everyone. We have that a lot where people are talking and people will, pop in a solution or an idea into the everyone. I'll usually read them. So that's the way I'll usually go about it. And if there's something that is a longer topic, for instance, and we'll go ahead and mute everyone. Melissa, if you could do that, except for me and Mike. If there's something that comes up and we feel like it deserves more play than the time we have, that'll go over to Mike to be done in the CU broadcast, and he'll schedule a meeting with you. And finally, these are recorded. So if it is that you have information that you don't want to share or can't share, we're reminding you that this will be recorded and published. We hope that won't stop you. It hasn't, that I know of, for anyone so far. So. But we like to just make sure that you know. So let's go on to the next slide. So this is just a quick how to use the chat feature. Some people struggle with it. At the bottom of the screen, and it kind of hides until you cursor over it, but you'll see there is a little link that says chat, and in that link you then can open the chat window, and usually you'll see the text up there, but you'll also see that at the bottom where you type, you can either type something to everyone, or you can pick someone individually off the list. So if there's someone here that you want to talk to or want to share stuff, we'd love to encourage you to go ahead and open up that line of chat, maybe share communication, emails, or however it is you want to talk, and we encourage that collaboration here. So with that in mind, we'll move forward. So the first topic on the list today is Federal Reserve removing Reg D. Now, I think what's been going on in the credit union space currently is that Reg D continues, but we've just been forgiving all the fees or anything. But this is, this is obviously a change. And my thought on this was, is this going to change programming for folks? Are people now, working in their cores to turn this off? Is it forever? I didn't know if anybody had any insight into what they're doing, wants to speak on it, but it seems like this is going to be, most of our core home banking products take this into account. Can that be shut down? It feels like this is one of those things that, they're lifting the limit. Do we just increase the limit to some number that's so high that you'll never hit it? I don't know. Does anybody out there? Gary, maybe I'll throw it at Gary. I saw my friend Gary Coates is on, and he's always a wealth of information. Gary, have you talked about this at your credit union at all?
Yeah, we've talked about it, and we're in the process of implementing it. It is a bit vague, so we don't know all the parameters around it. So I don't know if we'll just put in, change it from 6 to, 999, or if we'll try and actually shut it off. So we're quickly looking at it though, because I think it'll be beneficial. Members don't usually complain about it until they run up against it, and then they can't make a transfer and they call and complain. So that doesn't happen that often. And when it does happen to somebody, they're definitely aware of it. So we'll see, but I think it's a good move that we need to do it.
Yeah, and I think, as you pointed out, while members are not hitting it as often, in this situation they are, because now they're living out of their savings account. I think that this is a bellwether for what's to come. The only reason that we would have this issue is if people were starting to have to do a lot of transfers from their savings. And I think that the prevailing kind of attitude or mentality around that is, hey, I hope this is the last time I have to do this. I'm not going to make a big transfer. I'm going to make a smaller transfer. And then they find that they have to do it again and again and again. And they didn't realize that the rule was in place. So to me, it's interesting. Gary, I know you're the master of all data. Is there any numbers from your organization in regards to the uptick in Reg D? Obviously, there must have been some impetus for the Federal Reserve to do this.
I don't have the report yet, but we are in the process of getting that to see, excuse me, how big of an impact it'll be, and be able to, proactively reach out to those members that have had Reg D happen to them in the past, and let them know that the limit's going to be taken away once we get it in place, obviously.
Now, does that mean just the host, or do you also have, do your digital services support that as well, or are you going to have to do work there?
Yeah, we have Alchemy as our online banking provider, and I know that they've been contacted. I know that there are multiple credit unions that use them, and so I'm sure they're working on a more general solution for all of their credit union clients.
Yeah, I would imagine. And that was my wonder is, just cranking up the number on the host doesn't stop the website from saying, you have 999 more transfers or whatever it's going to pick up, So
Hey, John, it's Kevin.
Hey, Kevin.
Hey, I wanted to ask Gary and perhaps the group. I know one of the challenges that with a lot of the things that are changing, but one of the challenges with this is there's no date anywhere that says this is going to stop, or this is going to continue on forever, or anywhere in between those two, at least that I've seen. And that makes it more difficult to make decisions on how you might make these changes or might code for these changes, because making it a variable will take longer than just doing, hard coding to any changes we might want to do.
That's a great point too. Go ahead, Gary.
Yeah, that's the problem with the ambiguity around it, because you don't want to implement a solution where you completely eliminate it and as if it's going to be forever. And then, 2 months from now, we got to reinstate it. Then we got to undo all that work again. So that's part of the conversation that we're having internally is what's the best solution in case this is temporary versus if it's long-term.
Has there been any messaging from your core? And I want to be careful. I know because of our relationship with Scimitar and Jack Henry, we have a lot of Jack Henry folks, but I also know there are a lot of other credit unions on different platforms. But has anyone heard from their core regarding this in terms of, hey, we're developing something that says you can just shut it off or turn it back on, or is this an opportunity to, instead of having 100 people do 100 different things, to somehow form some sort of group to figure this out?
I haven't been on any emails with Scimitar. We're a Scimitar credit union, but I would imagine that they're on this. I would be shocked if they're not. I can update on a future call once I get more info.
Yeah, of course, Gary. So Premier members has already made the core system changes. We also made a small amendment to our policy map to map to the new process. So that's a good point. Not only do you have to make the changes to your system, and Kevin, but it sounds like, and Matt, maybe you want to unmute, but when you say your policy, do you mean your e-disclosure?
Yeah, can you guys hear me?
I can very well. Thank you. And thanks for joining.
Okay. Yeah, you bet. Thanks for having me. These have been great. So what we did, we were able to make the changes on our side to the core in our IT group. Pretty minimal changes. It didn't take a lot to make it happen. And we did go back and look then at our processes and our policy. And we just made it, all we really did on the policy is I just genericized it a little bit. We just, took out, specific reference. We just referenced will follow Reg D. So if Reg D, to an earlier point, changes again, because we don't really know, is this temporary, is it, is it permanent? We just simply simplified that statement in our Reg D policy that will map to Reg D. And so we'll pass that actually tomorrow night through the board meeting process as a policy update. And then we're going to go through and change policies. Now we do have a rate and fee schedule, adjustment that also needs to happen. So we're working that in the background as well. And then some of the procedural pieces, but the system changes were pretty easy on our side for our IT group to get done. So we executed that right away. And then, just processing policy amendments to map to it.
Yeah, that makes sense. But I think the thing that I hadn't thought about was the process and policy, and even the disclosure. Like, you may have to redisclose all the members, which I wouldn't want to do right now. But if you're e-disclosure, but I like the way you went at it, which was to genericize it and say we're going to follow the Reg D, and if currently the Reg D is lift the limit, then it's effectively a non-policy. But as long as you're saying that we're following whatever the rules are, you're safe, and so you don't have to redisclose. So that's pretty smart. I think Scott said they found something on Smug that basically said just remove the share types, turn off the Reg D from those particular share types, which would be another effective way to do it pretty easy. What I worry about in that situation, Scott, is just making sure that a lot of times, I don't know if the Alchemy and the other home banking products pick up the Reg D from the share type, or if it's something that is manually set in the share type tables in the different home banking. So, but yeah, I hadn't thought about the policy changes. I love that response. That's brilliant. That's good for everyone to hear. Thanks, Matt. So I guess my next question would be, okay, what's next? So what's the next regulation? So we started off with the stimulus checks, not touching those and garnering those. Now we're saying, okay, we're not going to do Reg D. Any thoughts on something else that may be lifted? Kevin, I just throw it at you. Can you think of anything else that we should be thinking about that we would get ahead on to start thinking about now? We might implement it.
Yeah, I don't know if I have any earth-shattering predictions on what will happen next. I think, from the PPP standpoint, making sure that anybody who's received those grants is tracking properly. And I don't know if anybody's asking financial institutions to make that calculation for them or giving them tools to do that. But I hadn't really thought about what the next big thing is, other than how you handle any type of delinquent loans or neg shares, because that's what's getting the most attention these days, and protecting members from that.
Yeah, and I wonder, I think that one of the things is that we're going to have to look pretty closely at garnishments altogether, not just for the stimulus check. I have a feeling that, like, for example, there could be rules put in place that say you can't garnish on a rent or something, like auto withdrawals and things like that. So I think if I'm guessing ahead, looking ahead, I think the other shoe to drop, and I think you're right about the PPPs. You and I had a conversation with a group the other day about that, where, the big game is in the end when they start trying to reconcile this. But I also think that given the situation, there's going to be a lot of thought put into how to prevent certain kinds of garnishments. And so just something else to consider while you're looking at the stimulus check, protecting that money. You may want to also think about, like, well, gee, let's put some other things in here to look at garnishment types and to be ready to, either put those in stasis or temporarily pause them. I don't know. There's a lot of different things. So, all right. Well, I just wanted to bring this to everyone's attention. It's one of those things where I feel like this is definitely what the town hall's made for. Just to throw it at Mike. Mike, any movement on this from your side in terms of, do you have anybody coming on to talk about this or?
No, not yet. But I'm glad you brought this up. So I'll start pinging people and see if we can get some people on. I was thinking about talking to somebody at Correlation about get the core perspective.
Yeah, I think that would be good.
Yeah.
To know kind of what they're thinking and, because not everybody has this as a simple way to turn it off.
Mm-hmm. Mm-hmm.
So,
Yeah.
yeah. All right. Well, let's move on to the next thing here. So the next thing we're kind of seeing is this whole $600 unemployment checks. And I could actually get some personal experience on this. My daughter, who was working as an executive assistant for a large restaurateur. I think that's how you say it, right, Mike? A restaurateur, someone who owned
Yes.
4 or 5 restaurants here in the Springs. And unfortunately, given that they're all shut down, he needed to let her go. And she applied to get unemployment plus this. And man, it is not easy, it looks like, to either get this or, to even get it, much less if you do get through the process, it's now delayed. So one of the things that, as I read this and thought about it was, do we need to look at some sort of unemployment, almost like Q Cash, which is Ben Morales' piece, where if you can prove just, what Q Cash is kind of a paycheck lending thing, but it's not a paycheck lending thing. It's not a predatory type of lending practice. It's basically showing that, we got a record of you getting all these deposits. As far as we know, you're still employed. You'd be good to get a check today for one that's due next week. It feels like if you could prove the unemployment insurance, that maybe there would be a huge opportunity here, if it's just delayed, to open up sort of a similar line of credit that would then get paid off when these came in. My thought was, is anybody looking at that, or is that something that would be, and Kevin, I'll throw it at you as well, but it seems to me this would be a huge help for the members.
Yeah, I think it definitely could be. I just, again, the uncertainty of, did I fill the paperwork out right? So am I actually going to get something? Or is it later in the process? So I'm not sure what the changes might be. So to establish that loan, even if it's just a short-term loan, it's going to be tough.
Yeah. Oh, Jonathan's here. I can tell because now he has a cool background. I don't know. Does anybody, I'm going to throw Jonathan on the spot. I don't know if he heard what we just said, but you guys talking about that at all, Jonathan?
So we haven't been honestly talking about this quite yet, although what's interesting is that in New York State, we keep hearing from the Department of Financial Services and the New York State Tax Administration that, we're not having. Somebody's blowing up.
Yeah, can you mute everybody, Melissa? There you go. And then unmute Jonathan. There you go. Thanks, Jonathan.
So, we're seeing that, New York State is, oh no, we're not having delays processing anything. We're not having delays. And then, it's my own personal experience, with just trying to even get my New York State tax fund refund this year. Normally they have these things out in a week, 2 weeks. It took me 6 weeks to get mine. So I'm not necessarily buying some of what we're hearing. So I think this is a really interesting thought behind maybe helping some of these members out that are experiencing delays, even though some of our state agencies aren't saying there are any. We have seen, what I will say is, we have seen a increase in what we call our personal assistance loans, which are, essentially loans up to $1,000 that are like 6 months terms. And again, sort of what I guess the industry would consider a payday alternative loan. we've seen definitely an increase in the number of members applying for those to sort of hold them over short term until they can get whether it's these benefits or other types of cash flow coming in. So there's definite need. We're using that product, that personal assistance loan product, extensively in that capacity right now. But it's interesting. The other thing is I was talking to our business services area, who's handling all of the SBA PPP loans. And so one thing we are doing for those members that are getting SBA PPP loans and where we have a written commitment back from the SBA, but we haven't actually received any funds yet, is we are giving the members access to the funds that we've gotten the written commitment for from the SBA, even though we haven't seen them hit our GLs yet, just to get those members up and running as fast as they can. So that is something we are doing for those loans. And I'm sure others have experienced this too, but unless you have direct integration with the SBA and are transmitting your loan apps and data through their XML file formats to them, it has been their site and their manual application process has been horrendous over the past few days. It's just been completely unreliable. So that's one of the reasons why we're doing that is it's just, we can't afford for some of these people to wait. They may honestly not survive if we force them to wait.
You make a good point. That's my whole point about this is it's self-defense in some ways, because okay, they're going to get the money and that $1,000 will hold them, but they can only get so many of those loans. And the problem is that it's not lining up or when the bills are due. So I guess the other question I would have is how forgiving are we on the reporting for delinquencies? Because we're going to create our own problem, in that regard. If we're the government's late on paychecks, and then people have debts and billing to pay, and then they all become 30 and 60 days late, then they can't get loans, and it just seems like a snake eating itself, I guess, or a lot of snakes eating itself, to make a Rick and Morty reference. But yeah. So I guess in some ways, I like your approach of self-defense on the PPP loans. I just wonder if we need to do a bit more. So are you guys changing? And I don't know if you were here for the Reg D stuff. It seems like
yeah. So I caught the tail end of that. So, and I heard your comment, John, about the various digital platform vendors. So we have a proposal into our board at this point to change our Reg D, and right now we're looking at it as we think that we definitely will relax the Reg D stipulations on our savings accounts. We're a little more up in the air on money markets right now. We tend to be fairly conservative from a compliance and legal perspective, and we think that we will relax the standards on money markets. But the other thing we're really having to think about as part of this whole regulation change is, okay, and I think that this is going to occur across everybody who's having these discussions is, so how do you differentiate these different deposit products if all of a sudden Reg D goes away and there's no more if there become more transactional accounts, what's the incentive to give a higher rate on a money market if you have fewer restrictions on what that member is going to be able to do? So one of the things we've been really thinking about is how are we going to incentivize people to have those deposit products, and what is the incentive to do so? And so I think what we're going to do is ultimately, we'll remove the Reg D limitation on something like a money market. What we'll also do is encourage people to use that as a savings vehicle by feeing over and above a certain number of transactions a month, which we historically have never done, so that way we can justify paying a higher rate on that savings vehicle, and incentivizing the behavior we want to see, even though Reg D is no longer in effect in that regard. So we've already started talking about making, developing the fee programming and all that good stuff internally to do that. And we are one of the credit unions, and I don't even know, I might have been part of the conversation on Smug where, in Scimitar land, all you have to do is remove that share type from the Reg D limited list, and all of a sudden your Reg D counters aren't going to go up anymore. But our work is really on the digital banking side, where we're now have cases open with our vendors like Alchemy, where we have to make them or have them make changes to either not show those counters anymore from the share records, or change the wording on those counters in the case of the money market accounts to read as more generic transaction counters versus Reg D transaction counters. So the heavier lift is actually on our digital banking providers. It's not so much us internally. It's our core makes that pretty trivial to actually change.
Would you think that is the premise for making that change around the idea that if members know, this was obviously, pretty well publicized in the news, if members know that that's, even if it's at 0, but then they see the Reg D counter when they switch to their savings, do you think that might initiate a call, an unnecessary call?
So I think so, and we have it's crazy. So your point about it being publicized in the news, literally when the news hit from these various financial reporting sites, the Fed, we had members calling us up that day going, so are you going to get rid of Reg D? And we're going, well, we're thinking about it, but give us a and so they were
It was
right
just
on
announced 8 minutes ago.
exactly. So they were all over us immediately because they hate Reg D, and we hate Reg D too. I mean, we're not a fan of it. So I think why we're doing that with the digital banking providers is exactly that, to reduce the calls coming in. Luckily, at least in Alchemy's case, they're reading the Reg D counter off of the share record. So it's really just changing some simple configuration in their side to do it.
Yeah.
But yeah, it's ultimately, we know that our members will call if they see Reg D counter on their transaction or their account details in Alchemy, and yet we've told them that, oh, well, these are no longer Reg D limited, or that we're no longer enforcing Reg D, because those are the things where we have it's a small but vocal subset of our membership that will hammer our contact center. And the other thing that is what we're thinking about too is we don't want to come up with some kind of convoluted system of this share type only, gets feed for this many transactions, and this share type doesn't get feed. We really want to try and make this very simple. So if we're going to get rid of Reg D, we're going to get rid of it on our savings shares, and then we're going to potentially fee over a certain number of withdrawal or transfer out transactions on the money market side. But that's really it. We don't want to have any more kinds of very granular distinctions between them, because it'll just confuse our membership.
Yeah, no, I think that's a good point. And I think your point about how that's, how do you differentiate between a savings and a checking in today's world, where they're both just, they look like record entries in a database that most people can understand. So very cool. All right, well, let's move on to the next slide. Thanks, Jonathan.
Sure.
And just a real quick question, is everybody still healthy and okay at Hudson Valley?
We are doing well. We're, I will say that, being in Dutchess County, it's certainly nowhere near as bad as Westchester County or the boroughs of the city itself. But, we like many others, we've had several branches, some multiple times closed down to staff testing positive to COVID-19.
So you have had staff test positive?
Oh yes, absolutely. So we've had staff test positive. We've shut down branches because of that. Generally, we've shut down for the branch where that test comes back positive for a good week at least at a time, to sort of do a cleaning and then just sort of let things settle out. The other thing we've been doing anytime we do get a positive test, and as I've said, we've had not a ton of them. I think we've had 5 or 6 at this point across the counties that we serve. What we do is we also notify all of the members within a 2-week range that have done transactions at the branch, as well as any vendors that have been there, that, hey, by the way, we have had an employee test positive. We want to make sure you're aware of that, and that
Wow.
you take any precautions that you have. It's interesting. My marketing PR person and I were having a conversation a while back. I think our communication protocol for that is probably far more conservative in terms of going more, communicating more than we necessarily might have to. But again, the last thing we want is for somebody to have become ill and not know that they were potentially exposed at a branch or through a drive-through that somehow had some germs on it from a staff member that tested positive. So, we've really tried to go out of our way to make sure everybody knows when these types of incidents happen. And so far, luckily, I think the membership have truly appreciated it. They have thanked us for making sure they're aware. Our vendors have thanked us for making sure they're aware. And, we've taken the approach of we'd rather over communicate than under communicate, and then have something surprise us from a PR standpoint, from a member relations standpoint that we weren't expecting. So yeah, it's been interesting. Although I will say that it seems like that type of activity, that type of incident, is slowing down. For a couple weeks there, it was like every we would have at least a couple branches each one of those weeks where it's like, okay, we're shutting down XYZ branch because we had a staff member test positive. It seems to have settled out a bit. It doesn't seem to be happening as much. So I'm hoping that we can start to take that as a more general indication of the slowdown of the spread of this virus. And so we're actually starting to make plans to think about what is reopening all of our lobby services and that sort of thing again look like. We don't really know what Cuomo is going to do come sort of beginning of May. Is he going to extend the lockdown or not past May 15th for businesses? But at least we're getting to the point where we're thinking, okay, maybe it makes sense to actually have a reopening plan if on the chance that we do get to open, that week of May 15th. How would we phase our branches and staff members back into various offices?
Yeah, no, I'm sorry to hear that about your staff. I applaud you for the contact tracing you're doing. Interestingly, Mike just hit the same thing I was thinking of, which is you just kind of gave me an idea. Like, you could almost tell people, like, for example, if there was an outbreak in the Target and, you knew the outbreak started on a Wednesday, you could almost find all of your not your employees, but all of your members
true.
who shopped in that Target on that Wednesday and let them know, man, that's a pretty wild idea.
That's very true.
I was going down that same road, and Mike actually posted it to everyone. In my head, I was like, so we do, and you could even tell based on the merchant code, the cashier that they talk to, because it comes in as a cashier number. You get like all that data in the system. Interesting. Let me write that down. Just a really interesting concept. Wild if the Craigians could help you do the contract tracing, if you needed to. Interesting.
Yeah, John, it's kind of the same thing we do with CAM's reports on card activity. When there's a breach, it's almost the same logic. So, you just have to go through and look through the account history and, looking for debit debit or credit transactions that took place at that location. And, then it becomes pretty quick process if you're doing that today on CAMs.
Yeah, I mean, you just reuse that. That's a great point. I forgot about that. Yeah, where you're looking for those dollar transactions from the gas station or whatever, where someone's testing it. In this case, it would just be, okay, we know of a location where there's been an outbreak and we know that people shop there. We just it would just be a courtesy. But it would be more of a courtesy. It'd be interesting though. There's probably a lot of legal around that. Like, would Target like us doing that? I don't know. Do we care? I don't know. Just fascinating. All these things that are going to be a new normal. Speaking of a new normal, I want to jump here to this excellent bankography report summary that Melissa scared up, which I thought had a lot of really good information. And I asked Kevin earlier, hey, what do what are we seeing? What do we think? And this gives us, this organization put together a little bit of an outlook based on this. So the crisis period, we're already there. We're starting to see some of these credit challenges. I mentioned this earlier. Delinquencies in credit cards and auto loans have been rising for several years. So now we have this upheaval where that's going to be expedited. We're definitely seeing that. We're seeing that we've got the plummeting oil prices juxtaposed against the COVID-19. The oil downturn will hurt big portions of our economy. And what does that mean for people like, Shell out in Deer, Texas? The other thing is that it's talking about how this is, again, the discussion's been here. Government actions to mitigate the consumer pain may push the problem upstream. So I mentioned earlier, rent deferments could likely lead to defaults of investment property owners. So if you have a whole bunch of people where you've got rentals as part of your commercial business portfolio, you may want to look at that. Mortgage forbearance is going to adversely impact the servicing firms and the holders of those. So I know a lot of organizations who a lot of credit unions who their whole business portfolio is mostly rentals and things like that, because those for years were a pretty safe bet. Speaking of that, the CARES Act mortgage forbearance does not cover non-conforming loans. So if you've got loans that are outside the scope, which in this case are 37% of all U.S. Residential mortgage balances, then your insurance side of this may be a problem as well. So I guess what this is telling me is some statistical analysis is going to need to be done on there. And I'll stop there just for a second. And Kevin, you want to comment on that?
I think there's just going to be a lot of things for us to consider. I think in talking with most credit unions, they're already kind of looking out to the future, kind of like Jonathan was talking about with the branches. How are we dealing with the branches? How's this going to happen over time? And do we open in stages, and how does that work? I think the same thing's going to happen with the loans and how those play against some of the PPP stuff, the grant programs, the EIDL. There's a number of things out there that kind of affect each other. And so you start talking about one thing and it triggers a couple other things. And I think, just trying to get in a room and brainstorm those items, trying to make sure everything gets boarded so that your responses can be kind of as close as possible to see what's going to happen in the near term, what might be out 60 days, and trying to work that.
Yeah. Well, and to your point on the unintended consequences or the domino effect, the next one calls that, the retail sector, we're already seeing bankruptcies. Then the shopping centers that house those retailers, they start to have trouble, which causes the commercial real estate portfolios to have a problem.
Well, and what about everyone's office space? I think people have learned that you can work from home. And so how many people how many businesses are going to be looking for either smaller space, shared space, or no space? And how does that impact the commercial real estate market as well?
Yeah. The next two were of the most interest to me. This one was one that I really thought should be brought up, these two. So, the likely jump in credit losses, which we talked about a minute ago, we're causing our own problem in some ways with that. Financial institutions will face an erosion of interest revenue, particularly based on the experience of the 2008 and 2009 recession, which Kevin and I were most of us were intimately aware of. That one of the things is that the trend from that is that borrowers hesitate to borrow again for a year or longer. What's interesting is we have some data from Doug and his group, which I'll be going over here in a minute, which at least at this point is showing that that's, at least by our surveying, is not the case. But this will affect origination fees and late fees, because You know, if you don't have loans, then, and I think it was interesting, it talked about late fees being prohibited. So that may be the other shoe to fall, Kevin, is late fees on some of this. And I see Jonathan nodding his head as well, you know, as he were looking at the garnishment. So this is all very interesting. And then the overdraft fees as well. And I
Yeah,
think
that's the big one. I mean, if, you know, if they start, I mean, that's a significant piece of income, you know, NSF and courtesy pay fees. And so, you know, if that's prohibited, that's a big cut, I know, in non-interest income for many, many credit unions.
yeah, so it's fascinating, all of this. And, you know, again, the premise of the town hall here is to talk about and discuss things and try to see around that curve a little bit. I kind of shifted format because we don't have as many people talking, and just tried to find some things myself. And, you know, I asked Melissa to look around too, and she found this. I think this is a concern. And so what I want to do is I'm going to transition and over to Melissa, if you'll bring up the survey that Doug sent over. So we've been talking about this survey for a couple of weeks. For everybody's comment has been here. I just wanted to cover a little bit of this. I'll undo my annotation so that there's not a weirdo yellow mark on the road there. But so Doug, do you want to go through this, or would you like? Are you okay if I do, or how do you want to do
Yeah,
this?
go for it.
Okay.
You're driving the bus really good. I like it. Go for it.
All right. So the first question, and this was something Doug and I had a long conversation about before we put the survey out, is what does this mean for projects? And so what % of major projects are continuing as planned? And the number is somewhere close to 70%. And that's out of, you know, the average number. Our responses were, you know, 37 people or 37 credit unions that basically said, yeah, we feel like, you know, around close to 70% of our projects will continue as planned. When we go to the next one, we get the converse of that, which is, if you want to scroll down there, the next one is, okay, well, you know, what percentage of projects will you be scaling back? And that number is about 30. So that makes sense. 70-30 split, same number of responses. You know, this is about what we see as are doing it. Now, my next question, which we don't have in here, and then maybe a future survey, is, well, what projects are being scaled back? What kinds of projects? Which there is a little bit of that detail in here, which we'll get to. And so let's scroll down to the next one here. Same thing, you know, are you putting them on hold or are you canceling them altogether? I think this question is the reason it's so close to the other number is because people don't know yet. Right now they're on hold, but they could be canceled. They're just in a stasis right now. And I don't think that people know, but that's certainly what this indicates as well, because the number is so close to the number that you know, aren't being done or put on hold. I don't know that we know that, you know, all together there. Let's roll down to the next one. So what are we canceling? Now that was interesting. So, you know, there's definitely a guess here that it's half the percentage of what's on hold. So it's close to 14%. Kind of makes me feel like that, again, it's I'm reading this data correctly, and I see, again, I like that Jonathan has his video on, he's agreeing with me. I think he's saying, yeah, I've got a lot of projects and I'm not sure which ones I'm canceling. I know there'll be some amount, and if I had to guess, it would be this. Also, they may just be on hold depending on how things go. You know, and so that, but yeah, there's definitely some thought to canceling. And I wonder how many of these are branch projects, you know, opening of branches, adjustment to branches. I feel like if we asked that question, Doug, that was kind of a follow-up question I had. You know, what types of projects are we, you know, looking at as part of the cut? Are they technology, branching, you know, new products and services? I don't know. So I thought this was interesting. Let's go to the next one. You know, pre-COVID, post, What percentage of projects are Q5 other? We got one that said, yeah, so this was a light year. I'm not sure everybody completely understood this question. What
I
do you
agree with that.
Yeah.
I don't think that was a good question.
Yeah, I think what we were trying to say is how many of these are of the projects were sort of not not fully thought out, types of projects that were kind of in this Q5 other plan. Are the canceled projects based on cost cutting or reduction efforts? That's another great question. And I think we have that one if we scroll down a bit. So let's move on past this one. Okay, so what's your experience? Interesting. What is your experience on your revenue? And so far, it's a zero-sum game. It's just a net zero. We don't think it'll go up, and we don't think it'll go down.
No, John, it
Yeah.
actually zeros, it's going actually toward the -20.
Oh, yeah, that's right. It's going the other way.
Yeah.
Yeah. So everybody expects a reduction in this under -20. So everybody expects a 20% reduction. Is that what you read there?
Yes.
And I apologize. I got these earlier today and I looked through them, but I didn't do it. I should have asked a few more questions. So, but yeah, so people expect a reduction, and that probably answers the question what Gary was asking about why. And it's because they expect a net reduction in revenue. Let's keep going. What percentage do you plan to increase or decrease your pieces? And it's a very small percentage of a decrease, if I read this right. Would you agree, Doug?
Yeah, I would agree.
So nobody plans to decrease their budgeted expenses because I believe that they plan on using those expenses for other things like sneeze shields and stickers that go on the ground and tracking down all the COVID people that were exposed by someone. I mean, I don't think anybody's going to decrease their budget. They're going to use it, but they're also not planning on increasing it yet because they're cutting projects, I think they're cutting projects out that will give them the money to do the other projects. I didn't see Jonathan's head go either way. That's my gauge, but that's what I feel like is happening.
Yeah, so just to chime in, I mean, I think, in terms of the cutting or decreasing budgeted expenses, I think the area where we didn't have a lot of wiggle room already within our operational expenditures, so that was kind of fixed. And so while we cut what we could out of those, we're not actually decreasing our operational expenditure budget because, to your point, John, we know that's going to be sucked up by other expenditures that we didn't anticipate. Like, for example, our thousands of dollars a month on Zoom accounts that we're now using. So there's that. Where we did cut back significantly, it goes back to the projects that we were either postponing or canceling altogether, was on the capital side. We cut a really decent chunk out of our capital budget where we're just not doing what I would consider a lot of, this is kind of a nice to have project. We wanted to replace like our intranet this year. No, we're not going to spend $250,000 doing that this year. Sorry. So it's those kind of things that we basically have said, if we have a solution that's working for us right now, we're not gonna spend the capital resources to go out and replace that in a year where we know it's going to be difficult anyway. So that's really where our expenditures were cut, not so much on the OpEx side of things.
Yeah, that's kind of what I expected to hear. And I mean, there's a lot of organizations that run a little differently, but most Crayons run where, hey, we get it. There's a bucket of money that's allocated. Let's try to stay in those parameters as long as we can to not offset our plan for 2020. But so by cutting projects, and I think it's just more extreme this year. So, all right, let's move on to the next one. Thank you, Jonathan. Do you plan to, if you plan to decrease expenses, where do you plan to cut them? 100, the 70% was projects. I think that just bears out exactly what Jonathan was saying. Not a huge piece for staff, not a huge piece for facilities. The other was a little higher than I thought. And if I scroll down, I think, and I thought we had some of the specifications. I thought I saw some notes in there. But I was interested. I feel like the technology question was interesting to me. I feel like in some ways we're going to have to tech our way out of this. And so I was surprised to see that have as big of a cut as it did. I feel like there would, like, for example, to me, Zoom is an example, what Jonathan just said, of increasing that expense as opposed to decreasing it. But people may not have understood the question in that regard. They maybe it's going, well, I'm not going to add any more servers like you were saying for this or that, the intranet, if it's working. So maybe there, a follow-up question to this would be, what kind are you increasing to implement new technology? For example, Jonathan, I want to talk to you after this about, we've been developing in a third party I've been working with UVC robots that can run around the branch and completely disinfect it every day. So we'll chat about that. And this is with a third party I'm working with, but I know that cranes are going to need that. And it's, much more positive and gets into more cracks and schedules. But let's scroll down. But that's an example of innovative technology for that. Oh, there's the others. Okay.
I was going to mention, John, I was just going to mention to you too, I think when we first put out this survey, all the lockdowns had only been in place maybe 2-3 weeks. And I think people have had time to digest some of this now. And so if we ask the same questions today, maybe some of them a little clearer, I think we're getting different answers. And some people where it was just a gut feel, they hadn't seen March's month-end, quarter-end financials yet. But when you look at the decrease, saying it's probably going to be around 20%. But if Credians go actually out to CUNA's website, excuse me, and there's some slides from Mike Shem, I believe, probably screwed up his last name, he's their economist, and he said the ROA right pre-COVID is around 0.93, and he thinks it's going to go down to about 0.3. Well, that's well over 50%. He said, in a number of cases, it could be break even. So here's an economist's view, a lot more dark, if you will, compared to this survey. But I think it's the difference of, just a kind of off the cuff, not having the details. But now that the details are rolling in, it might be different types of numbers.
Yeah. No, I completely agree. And I think that's the concern around that is, what does it look like when we, the further we get into this, the more we know, and sometimes the data is a bit dated. I also thought, and this is a good one that, we didn't think to add as a category, but travel and conference. I'm sure that is a significant amount of money in the bucket that isn't being spent. But yeah, I completely agree with your summation there, particularly around, you could see the dates on these 4/3, 4/9, 4/10. Some, it seems crazy, like that's forever ago, but it is forever ago in this situation. So it's a good point.
I think on the travel and conference, John, I think it's going to be interesting to see, like Alchemy is doing a virtual conference, and how many conferences go in that direction, trying to support a reduced cost, but still get some income and still get the information coming back and forth between them and the client.
Yeah, and I think that it's going to be all about the tech and how successful it is.
Well, John, I imagine you remember when in the 2008-2009 timeframe, when Scimitar tried to do their virtual conference and not have people travel, and the consternation that caused among the entire client base. And I'm sitting here thinking about that experience and going, okay, so how do these companies like Alchemies, like the Alchemies of the world, improve the user experience to make these actual, valuable experiences versus frustrating experiences? And And it's actually something that I've been starting to talk with my Scimitar client, CRMs is, our budget's being cut. If our budget at a $5.5 billion credit union is being cut to go out and do these things, I suspect you're going to have a lot of clients seeing their budgets cut. And so what is Scimitar or other core vendors going to do to help support clients that normally would be there and get a lot of value out of this, but can't be, and avoid the negative reactions that we've seen in the past? And hopefully the tech has improved significantly since then for large online gatherings, and Zoom I think is a testament to that. But I know a lot of us still have memories of some poor experiences with virtual conferences in the past.
Kevin made me man the virtual WRG booth, so which
Gotta have somebody there.
Yeah.
John, to make the conferences, eventful, you just need to have Grubhub,
Yeah,
alcohol
your
and
lunch is outside the door.
and hors d'oeuvres.
I like it. And also, will there be beer? We do that as well?
They're delivering that too, I hope.
Yeah, Mike just mentioned Co-op is doing a virtual Think conference. I think that it can be done. If what you're there is for information, I could foresee, each of the breakouts being done in the Zoom, and I would appreciate that. Where like if I was teaching more about SimX, Sim Exchange, which again I don't want to be too Scimitar oriented, but I would be happy to do a Zoom in lieu of going out there and standing in front of everybody and disseminating the information that they want me to do. I think if they do it right, it can be done. I think this idea of virtual vendors and other things is not going to work. I think that I would sell sponsorships to each of the ones and really try hard to get, to make sure that we take advantage of, somebody that has some rhythm with the topic at hand. So you might have somebody who does development sponsor the SimX, portion of it. So I don't know. I'm just guessing. We're getting close to time, so I want to keep going here. Let me keep moving down. Are you seeing what % increase or decrease are you seeing in loan application volume? So this is really bearing out what that last slide said, a 20%. I think what's happening is we're working through this queue that's out there that was sort of this in flight as this happened, and now it's slowing down. Although, I've talked to my wife and we think now might be the time to buy a car. Both our cars are paid off. We were thinking about getting something new, and we think now might be the time. So I think there'll be a small contingent, just like there was in 2008 and 2009, but then there'll be others that just out of safety reasons or whatever, that hesitation, as it was pointed out, don't want to create more debt in their model, for fear of uncertainty. Doug, would you read it that same way? I'm going to say yes for him. He would. Let's keep going. The strategy, the change in member channel usage is definitely way up. Out of, we've seen, a huge shift to digital. I've been on with many credit unions that are struggling to accommodate the amount of data or amount of people that are hitting their digital services. We've been helping them by stress testing and looking at some of the bottlenecks and basically tuning systems. So that's been a big part of what we've been helping out with. Beyond the digital system itself, there are other things that are involved. There's network peripherals, there's firewalls, there's the core. But we're seeing a lot of demand for that. That's a big play out there at the moment. Let's go to the next one. So the drive up has increased, obviously 70%. The call center has increased, interestingly enough, not as much as I thought it would, but quite a bit. That's still, Kevin, you ran a call center for many years. That's a nightmare scenario to suddenly have a 35% increase, right?
Absolutely.
Yeah, you'd be under the desk crying again, like before. Let's keep going. ATM usage up, all of this is sort of expected. What's fascinating to me is the numbers. I think ATM usage is down a little bit more because I don't know, everybody wants to touch an ATM. We definitely have seen members calling in about that. For me across New York, I don't know about you, Jonathan, but definitely Visions had a lot of members calling about that in the early on. So did Corning. partners we have. So let's keep going. Debit card, I could see this going up a bit as they use services like Grubhub and whatnot. And
So real quick, John, this is something, so our BI group has been doing new trending analysis on our debit card usage and the cities they're used in based on the terminal city that they're sending through. Grubhub is in the top 25 cities that are coming through on our debit card usage. So just to give you an idea of where people are spending their money right now.
And thank goodness for that. Scott Grundy from US West mentions that they've had members put money in the microwave and brought it in burnt. That's better than my plan.
Yeah, I've heard, John, a couple retailers who won't accept cash right now because there's not a real good way to disinfect cash. And so, they're forcing people to use the card and stay behind the barriers that they've created so that there's no exchange of anything, no card exchange, no cash exchange. It's just the customer putting it into the terminal at these retail spots.
Yeah, that's that's why we have to invent the portable microwave that you can bring with you, and then in front of them you can microwave it.
Pretty sure that was on an episode of 30 Rock.
So let's keep going. Credit cards, same model, same issue. Those are all going to go up because people are buying more online and they're learning these digital services. Keep going. Mobile, that's one I thought. So mobile, digital in general, this is a new normal. I think that we have people who are resisting using these services, who are now using these services, discovering that they're valuable, that there's a lot they can do with them, and they're not going to go back. And this is interesting to me because I have a feeling we're going to have to look at closing down some branches. And I know that this isn't going to sit well with certain portions of the credit union. I can say that because I'm not in the credit union to get hurt by the people that run that side, but I worry that that's the case. And I think that, we're transitioning to digital services faster than we ever thought we would. And this has accelerated it by, I would say, years. So just something to consider. Web usage, same thing. We talked to a credit union the other day. We had Andrew on from OCCU. I don't know if he's on today, but we had another credit union we've been working with. They saw 90% of their active membership log in one day. That's really, nobody plans for that. The chances of everybody showing up to the that's like every member that's part of a branch all showing up at one time. It just doesn't happen. So some really crazy things going on. But what's interesting to me is, what I wanted to know out of this one is, and it's a question for you, Jonathan, are we seeing, so if we look at our active users, is this a 30% jump in the active users, or are we adding new users inactive users are becoming active users? Is that what, I don't know which one this is. I want to ask some more questions.
So, in our regards, and I don't have the exact numbers in front of me, but I have been talking to our marketing folks and some of our other folks that are monitoring these numbers fairly closely. So we've been tracking new user registration since the beginning of, sort of the real beginning of the pandemic in this part of New York, I guess is what I would say. So we're calling that March 16th is when we're started tracking. And we've had about 10,000 new registered internet banking users since the start of the pandemic, which is significantly more than we normally would see in a month's worth of time. So there's definitely not a lot of new user growth, but I would say that it's probably only accounting for about 45–50% of our active user growth in the same amount of time. So we're definitely converting some previously resistant registered digital banking members, whether they were using desktop browser or whatever, into active users because they are not able to get into our branches and do what they're normally have been doing. I mean, and these are people that have traditionally, like, they're the people that like to go in and chat and say hi and do that kind of stuff, but they've needed an alternative model. And they also, sure, we have drive ups open, but there are days where we have drive up lines chained around a block because they're nobody wants to sit in those lines. So to your point earlier, John, I think we've basically forced a migration to digital in a very extreme manner, but I don't think our volumes are going to drop off magically when things, quote unquote, start to return to normal. I think we're just going to have a much more engaged user base on the digital channels. And while we may not have the extreme spikes in traffic, we are going to have a more consistent, higher level of traffic going forward. I don't expect these numbers to fall off, especially since these people have learned why we've been saying it's so convenient to do your banking digitally versus going into a branch for years. They just hadn't listened until now they were forced to. So, I know Alchemy has had to drastically scale up their capacity to meet the demands on their systems. And, from my conversations, they don't see that scaling back anytime soon. They think this is going to be somewhat the new normal, especially as the stimulus checks die down. The traffic we're seeing now is probably going to remain pretty consistent for the foreseeable future.
I would agree. And thank you for sharing that. It's interesting to hear you have a combination of new and also inactive members becoming active. And if I were somewhere at the credit union, I would be monitoring that because it would affect my 2021 budget. And it would affect how I do things. And it would also affect, and this is a plug, but opening up other new channels. We're starting to get a lot of people who are very interested in our Alexa and Google Home channels because they're touchless. They work well for the seniors. So if you're interested, that's my plug. It works with It works with the Member Pass. It's built into it for security, which we always get that question. So yeah, it's a good combination that we have going on there. So people are interested, definitely reach out to us because it's not that hard to add this other channel. It works right with Alchemy. It works with those products. But if you give people a couple more ways to go, I think they'll use them. And so if you wanted to build that voice platform, now would be a good time. Let's scroll down a bit more. I'm thinking I have a meeting here, so I'm worried that I'm going to have to. Melissa, are you handling the other meeting? Anyway.
Yeah, it's just an internal one, and I've already emailed them to tell them we're running late.
Okay, thanks. I want to keep going though. So if fraud, I think everybody says no, they're not seeing it, but they expect it, and they expect it in the form of scams. If we scroll down a bit, and Doug, we're sharing this out there for everybody to download, right?
Yeah, this is a non-clean version. We're going to clean it all up. Should be available in another week or so. That's, I would say, would be the better version to distribute to other people.
Yep. So we'll get that.
You can, have this right now. It's fine.
But if somebody wanted it, like they needed it for their board or something,
yeah,
they could email us and we'd take care of it. Yeah.
Yep, absolutely.
So if you want to just put it in if you want a copy of this for now, because you showed up for this one, if you want to put it in the everyone thing, we'll get you a copy. Melissa will send it out. What I said, scams, text, phone, email, I think everybody realizes that's the big deal there. And I think this is it. I think there's only a little bit more left here. I actually think that was the last one. Oh, call center usage, secure, they're having to do, what's your credit union doing to ensure additional staff trainings, number one. But most things are saying, hey, what we have is working. No changes to the current, plan. I don't know how long that'll last because I think that I think we're going to need to do some other things going forward given our new normal. I'm not sure what it looks like totally yet, but for now, it's good that they're working. But I think that we're going to have more people using digital means more account takeover. It's that simple. The numbers are just math. X percentage And if X percentage are people that didn't want to use it before, my feeling is that these are not going to be power users, and they are much more likely to see fraud takeover, which means that we need to up our authentication processes. That's my 2 cents on this. It's a rolling domino. Go ahead, Jonathan.
Hey, John, I think even for the branches, which are going to be challenged, like you said, retail doesn't want to deal with cash. They don't want to touch it. Staff doesn't want to touch IDs. They don't, things going back and forth. So, what's the next methodology to eliminate that?
Yeah, I tried telling one of our credit unions to just have the members lick it and stick it to their forehead like a card game that we used to do. But apparently that wasn't well received. But it would make it so you don't have to touch it. So we'll see. What is the name of that game? I forget. But everybody has a card stuck to their head. Let's keep going. I think this is it. This is the last question in here. Yeah, this was it. So first of all, I want to thank Doug for taking the time his team putting this together with us, and it's great information to share. It helps a lot of people to understand. It's pretty much what we expected, but there were definitely some surprises in here, which I'm glad we were able to see, and also some other things that we could determine from that determine direction. So with that in mind, like I said, if you want a copy of it, either email or call us. If anybody, does anybody have any more they want to share or wanted to speak and didn't? And Dante, I want you to give us a quick update on Member Pass.
Yeah, sure, John. I couldn't have asked for a better precursor. I mean, everything in those slides underlines everything we're trying to do. And what we're seeing is an increase now in credit unions joining our trust registry. I think we've got over 20 of them that formally came in the last week or two to get their digital credential and their identifier stood up. And as you saw in the slides, a lot of credit unions not able to actually implement right now and postponing some of those IT and development resources. So those that want to do Member Pass but can't do it today, getting on that trust registry is an easy way to do that without using IT or development resources. So, I think these trends we're seeing, as you said, are going to stick around beyond the pandemic in terms of the increase in digital usage, and shoring that up and anchoring identity for credit unions and for members with the use of distributed ledger is going to become critical. So I think it's very important. So thank you. I appreciate that.
So where can they go if they want to check it out?
Go to digitaltrustregistry.com. Go right to digitaltrustregistry.com, and that links to us. You'll see the registry and be able to sign up there.
Yeah, maybe post that in the Everyone group real quick.
Yeah,
that link.
will do. Thanks. Yep.
All right. Does anybody else have anything? I want to thank people that always speak for me, like Jonathan. Thank you so much for participating. As always, it's hard to do these when there's no audience and nobody bouncing back at you. So I'm so thankful for you. And I'm sorry to hear about your folks.
No, I mean, the good news about our folks is that every one of them that has tested positive has rebounded and recovered. So from that perspective, we are incredibly thankful as an organization. And, ultimately, we hope that nobody else gets infected, but we hope we continue to have the same success rate in recovery if they do. So, knock on wood, if Cuomo's right and about the numbers in New York, they're starting to decline. So that's some light coming positive news coming our way. And even though it might not be normal again, hopefully at least the sickness goes away a little bit.
Yeah. Well, like I said, I can't thank you all enough for participating. And Doug, thank you for sharing that information, and thank you to all our sponsors. Mike, thanks for coming, and we'll do this again next week. So, Mike gave us the big thumbs up.
Yeah, indeed.
Mike, anything good coming up on CU Broadcast?
No, just more talk on recovery.
I thought you were going to go to that jail where the outbreak was, and you were going to interview the cellmates who were part of the prison credit union.
Excuse me?
No?
I think I missed that one. Sorry.
Oh.
Not in person.
I was looking forward to that.
Not in person. Well, we'll probably dial that one back up. But no, I think what we're hearing right now, or at least what I'm hearing, is a lot of recovery talk and how we're going to recover. And I just got an email from another person pitching a story to me about the next wave of pandemic is litigation. Are you guys hearing about litigation that might come around as a result in the ensuing months, and obviously
Yeah.
practices and things like that? So kind of the reality of it, now that we're not living in the present so much anymore, now we're looking toward the future and how's it going to look. So these are the things that we're all going to be having to be dealing with. So yeah, and I totally agree with you about the whole voice thing, John. Is like nobody wants to touch anything. We have all this touch technology now, but nobody wants to use it anymore because nobody wants to touch anything. So voice is going to be huge. Wearables are going to be huge. So all that type of stuff. So
Yeah, we actually are working with Vibrant on a voice check-in for the branches.
that would be sweet.
Yeah,
That'd be sweet.
pretty easy to, and you wouldn't have to touch anything. I think, I guess one more thing too is just for those of you who are working on digital, especially if you're Alchemy, we are Alchemy certified partners for their SDK, and we've been working with them. So we know they're struggling to keep up with all this. They've been reaching out to us. So they want, we're happy to help. We actually are certified, have all their systems. We've done home banking programming before, regardless of Alchemy. So if you got stuff there, we're still digging out of this too. So we're always thankful for any opportunity to help you. That would also help us, and we're open to lots of ideas. So
Indeed. Lots of opportunities out there for sure. And Dante, Member Pass, this couldn't be better timing for Member Pass. My gosh. So
yeah. Well, and I still believe that there's going to be an immunity registry, and it needs to be digital because people can, we learned that from the other pandemics. You can't have papers that say you're immune because those can be forged. We're going to need something that's backed by a certified digital entity that can, that you can be sure that if they have it, they're okay. You're already seeing this in South Korea, China, other places. We've got to follow suit. I hope we get our act together in that regard, because I think it's just as important to the testing and everything else to opening everything up is a way to know for sure that someone's already had it or been immune or whatever.
Yep. Agreed.
All right, guys. Well, thank you again. And we'll do this again next week. And thanks for all the input. Thank you, Kevin. Thank you, Doug. And thanks, Jonathan. Be safe, buddy. I'll reach out to you about that. I'll send you something really cool.
Yes, please.
I will. All right. Talk to you soon.
Thank you.